Expansionary fiscal policy, government spending less tax revenue, creates deficit spending and leads to debt. So let's look at where we stand when it comes to debt in Canada. We need to distinguish between net debt and gross debt. Sorry, my mind just went blank. So net debt is the amount you owe. So this is our liabilities minus our assets. So net debt takes into consideration the fact that we could liquidate our assets, we could sell them off, and we could use it to pay down some of the debt. Gross debt is the total amount that you owe. Okay, so we're going to look some of the graphs that come from the Canadian federal government. They're primarily in terms of net debt. And that's because net debt looks better. The percentages are lower because it's liabilities minus assets. It assumes that we liquidate the things that we own, sell them off, use it to pay down the debt. Whereas gross debt, when we look at those numbers, we're looking at numbers close to 100% or over 100%. Because that's the total amount that's owned. So governments like to show net debt instead because it looks a little nicer. But it's important we distinguish between. So let's look at net debt. You can see here from 1925 on to the present, the net debt. And so this big spike you see in net debt here in the 40s was, of course, World War II. And so when we look at the debt that we have in Canada, we are still paying off World War II. Okay, one of the reasons our current gross debt is so high is because we're still paying off the expenses from World War II. We'll talk more about that in a moment. But you can see here in the blue and then in the gray, the net debt of the federal Canadian government. And then you can see here forecasted in 2020 when you start to add the impact of COVID on deficit spending, accumulating debt. What you can see here in this dark black line here is the debt charge, and that's the scale here on the right. That is the interest owed on the debt. So we were looking in our previous videos at the interest that the US owes on their debt. Here's where we look at the debt, the interest that Canada owes on their debt. And you can see that in 2020, they forecast that the interest on the federal debt will be about 1%. This is why some Canadians, both the provincial and federal level, have argued for additional deficit spending to stimulate the economy. If we look at the low oil prices we've seen from 2015 on to 2020, using government money to help stimulate the economy. We've talked about it in Alberta as well. And at the Canadian level, one argument for continued deficit spending and not worrying so much about accruing more debt is because as interest rates fall, debt is cheaper. You don't have to pay as much for that interest on the debt. And so then you can get away with having more debt, is the argument. You can deficit spend, you can increase the debt because the cost of having the debt isn't as much as it was in the past when interest rates were much higher. All right, so let's look at more in terms of the debt. So the other argument for deficit spending that adds to the debt that we hear from the Canadian government is that in comparison to other countries, our net debt to GDP ratio is considerably lower than other countries. Now, we have lots of assets that we can liquidate. That helps with that as well. When we look at countries like Greece, they had huge amounts of debt. In fact, let me see if I have that graph here. All right, here you go. Here's Greece. Their gross debt is almost twice their GDP in terms of the amount they owe. So what have they been doing with this debt? To help pay it down, what they've been doing is liquidating their assets, selling museums and my mind is not working today, where you have boats and planes, airports, and yeah, the word is escaping me. Wherever the boats are, is selling that property to private investors and using that money to pay down the debt. So if we look at other countries in comparison, our net debt is significantly lower, which has been another argument for more deficit spending and adding to the debt without worrying about it. If we look at the debt, here's gross debt. Okay, so remember net debt, assets minus liabilities. Here is gross debt, total amount owed. And this is the federal government here. So you can see Canada sitting at about 90% of their GDP in terms of the amount the federal government owes. The US, they're over 100%. And you can see that Canada actually worked to reduce their debt in the 2000s. And then as we've seen recession, oil, COVID, we've seen our debt go back up, which might indicate that we have cyclical debt, that we're paying it down in the good times and accumulating more in the bad times. And you can see here in the US, their debt just continues to increase and increase. And we talked about why that is in our previous video. All right, so should we be worried about accumulating too much debt? Well, in the US, they're constantly talking about the US having too much debt. In 2017, it's about 82% of GDP. Now they're sitting at about 110% of GDP. They're constantly talking about being worried about the debt. But do you ever hear about Japan's debt? Look at Japan's debt. More than 2 times their GDP is how much they have in debt. How come we don't hear about the Japanese economy, the end of the Japanese economy, because they have so much debt? Well, it really comes down to who owns your debt. So when it comes to debt, we talked before, right? The government spends more than they bring in tax revenue. And one way they can do this is by borrowing money from the Bank of Canada. The Bank of Canada issues a bond that the bank will then sell to banks. You buy those bonds as investments. You're really buying the government's debt. In Japan, the reason you never hear anyone comment about their debt is that their debt is all owned by the Japanese. In which case, the government spends more to stimulate the economy and help the Japanese. It's okay because it's really that debt is owned by those who are benefiting. In Greece, when it came to the Greek debt is all foreign owned. It's a lot of banks in Germany that own Greek debt. So the problem is that those investors who bought those Greek bonds, they expect their money back. They're not just going to forgive the debt. And so that became a problem for Greece. As their debt increased, they had to pay interest. Okay, the bonds hit maturity, they had to pay the money back. And those banks, people in other countries, they wanted that money back, which is why, as we talked about a minute ago, Greece started liquidating some of their assets. So, what about the US? And what about Canada? Do we have too much debt? And who owns it? Well, in Greece, 80% of their debt is foreign owned. So you can see why it was problematic for them. What percentage of Canadian debt do you think is foreign owned? How do we compare? Well, here you see on a graph who owns Canadian debt. So in terms of who owns most of our debt, we have pension funds and insurance companies and banks. And you can see here, as of 2011, 2012, foreign ownership was about 21%. As of 2017, it's about 31%. So we're seeing foreign ownership in our debt increase, more foreigners buying up our government bonds. What about the US? Who owns their debt? In the US, about 34% of their debt is foreign owned. Okay, compared to our 30%, compared to Greece's 80%. And who primarily owns the US debt? China is the biggest foreign owner of US debt. Why does this matter? Well, if you're in trade wars with China and China owns most of your debt, are they going to easily forgive that debt or be willing to buy more so that you can do more deficit spending and accrue more debt? Well, unlikely, right? You got to be nice to China. You got to make them happy, give them what they want if you want to continue deficit spending, because you need someone to buy your bonds, lend you the money in order for you to continue spending. Okay, so what impact does government debt have on the economy? Well, as we said, if you have a lot of debt, then you have to pay the interest on the debt. And of course, if this is foreign-owned debt, that becomes even more important because they're less likely to forgive those debts. So if you have a lot of debt, you have to pay the interest on it, and that can be a challenge. We saw with the US, right? Trying to pay the interest on the debt when you already have your expenses more than your revenue. Okay, well, oops, wrong slide. Let's try that slide. Well, what if you can't pay the interest on the debt? If you can't pay the interest on the debt, then people are not going to lend to you, right? You can't accrue more debt because people won't lend you money. Well, how do you entice people to lend you money? Well, if you are a high credit risk, what happens to you as an individual? If you want a credit card, that credit card company is going to charge you a lot higher interest rate. So if you got bad credit, your interest rates go up. Same thing here. If you can't pay the interest on your debt, when those bonds hit maturity and the Chinese want their money, their investments, they want their money. They're not going to lend you more money and buy more bonds if you're not going to pay them. So how do you sweeten the pot and get them to lend you money and buy more of your bonds? Well, you're going to have to make it an even better offer. You're going to have to get those interest rates up. Just to show you an example of that, here we have bond spreads, okay, for some of these different countries. And we said Greece, right? High risk. Nobody would lend to them. They can't pay the interest on their debt. So what happens to the return on their bonds? Notice how they're much higher than these other countries. Oh, that's the wrong one. So notice how that their return on, or the interest that you accrue on these bonds, are much higher. And in fact, if we look at, for example, let's say 2011, a 10-year note in Greece would accrue interest of 35% in Greece. At the same time, a 10-year note in Canada would just earn interest of just over 2%. So if you can't pay the interest on your debt, people won't lend you money. In order to entice them to lend you more money, you're going to have to pay them more. Higher risk, higher interest rate. Okay? So then the problem is, if you already have lots of debt, you've just made that debt even more expensive because you're now having to pay a higher rate of return on it. So what do? You got to be able to pay the interest on your debt to make those investors happy so they'll keep lending you more money. So what do? Well, you could increase your taxes. If you bring in more money from your people, then you can use it to help pay down that debt. Because remember, part of the problem was we were deficit spending because the revenue that we have here was less than our expenses. So if we can get that revenue up, we can start paying off some of that interest. Well, what impact does this have? if you raise taxes on people, then they're going to spend less. Your economy is going to slow down. And if people are going to spend less, they're going to make less, you're going to shrink the economy. One of the causes of government debt is that we are spending more to stimulate the economy during a recession. So the last thing you want to do is, when you're trying to stimulate the economy during a recession, is to increase taxes and lower other government spending so you can help pay the interest on your debt. So we're making a contracting economy likely even worse. What else could we do? Well, we could print more money. Okay. We've seen videos of Argentina. We've talked about Zimbabwe. They were all in this debt spiral. And for Zimbabwe, there was an economic contractions, right? We talked about how they weren't producing, the farms weren't producing, so the GDP had shrunk. So the last thing they want to be doing is increasing taxes, decreasing government spending, because that's not helping the economy. So their last resort was to print money. We talked about Argentina. They were paying off debt from wars. Well, wars are very expensive, lots of government spending. Well, then you can't pay the interest on your debt. People won't lend you money. And their last resort was to increase the money supply. And we know that increasing the money supply is problematic, because if you print too much money, you get hyperinflation, everything gets more expensive. And then again, your economy contracts because people can't afford to buy anything. Businesses can't afford to pay their workers, and we get stuck in this downward spiral. So the challenge is, it's really hard to get out of once you get in this position. So debt begets more debt, and then you're having to contract your economy even more to get out of it, raising taxes. You're creating inflation by increasing the money supply, which again hurts your economy. So getting stuck in this downward spiral is quite problematic for countries. To raise a flag as to when they're getting to this point in the US where they can't pay the interest on the debt, so to kind of prevent them from getting stuck into this downward spiral, the US has what is called a debt ceiling. This debt ceiling is a number that is set to indicate how much debt before we really just can't pay the interest on the debt anymore. Canada doesn't have a set debt ceiling. We don't have a set number that we try to stay below, but the US does. And so the US has hit this debt ceiling. I think I have this number somewhere. Maybe I don't have the number offhand, sorry. But you can see here, I'll just show you on the graph. You can see here in red that debt ceiling. And you can see all the times that they hit the debt ceiling. In fact, lately we've been hitting the debt ceiling multiple times a year, where we get that interest on the debt has accumulated so much that any additional deficit spending would go above the debt ceiling and put in jeopardy that ability to pay off the debt. In fact, we saw in that US example that they're exceeding the debt ceiling. So what they keep doing, though, is they keep raising the debt ceiling by arguing, well, interest rates are falling, or we make this slight change to spending, or to the way we're keeping track of the numbers, we'll be okay. And so they keep raising and raising that debt ceiling so they can keep deficit spending. So what do you do about it? Well, when we ask people, and this comes from The Economist, when you ask people what they should do about the debt and the fact that it keeps increasing, you can see in the light blue, though, the percentage of the population of different countries who think that you should increase taxes. The dark blue is cutting government spending. And then you can see other pieces. The challenge here is that we said increasing taxes hurts the economy because it's less money in people's pockets and they do less spending. It's also hurtful to cut government spending because that's also people's jobs, right? The government spends money on police, on building hospitals and roads that create jobs for construction and infrastructure. So it becomes challenging to deal with the debt because increasing taxes and lowering government spending is also controversial because it impacts individuals. We've seen over the last number of years as the debt continues to rise, austerity protests. These are people who are protesting increases in taxes and decreases in government spending, layoffs to public sector jobs in order to help balance the budget. In Alberta in 2010, we hear from the UPC government intends to cut government spending on doctors, nurses, education. All of this is to reduce the government spending to help balance the budget and fight the increasing debt.